Good morning, everybody. Very happy to see all of you that you joined us in the EU Deforestation Regulation presentation that ecoDa is preparing together with Storenzo and ourselves at AO Shearman. Very happy to be here. We'll give you a bit of a legal presentation and then go on with something more practical and more real life that may be of interest to you guys. If you allow me to introduce myself, I'm Gauthier van Tuinen. I'm a partner at AO Shearman in Brussels, working in the environmental and regulatory section. And I'm very happy to be joined here today by my colleague Jochem Spaans. Jochem, you want to
Jochem Spaans, partner based in Amsterdam, heading our environment and regulatory team.
Okay. Before you all run off, because it's only Laura speaking, Michaela, can you introduce yourself?
Yes, thank you, Gauthier and Jochem, and hello to all. My name is Michaela Thorström. I'm working as the EVP Legal and General Counsel at a company called Stora Enso from Finland, so working in the forestry industry. I will comment on the regulation later on after the Jochem's and Gauthier's presentations. Thank you.
Okay, wonderful. If you could go to the next slide, please. Where we actually be setting the scene. Now, deforestation, forest degradation are significant contributors to climate change and biodiversity loss. And actually has also been witnessed at the COP16 on biodiversity, and where it has been emphasized that indeed deforestation and forest degradation by 2030 should decrease. Now, if you look at what the key regulatory initiatives in that area are, obviously the EUDR, the EU Regulation on Deforestation-Free Products, because that is what we'll be talking about. Although you will see in this first bullet that we have added square brackets to the year 2025, and we'll come back to that because there's quite some uncertainties as to when these obligations kick in. Now, the main driver of global deforestation and forest degradation is the expansion of agricultural land, which is linked to the production of a number of commodities included in the scope of the regulation. And as the EU is a major consumer of such commodities, it can or has the intention to reduce its contribution to global deforestation and forest degradation by making sure these products and related supply chains are deforestation free. And that will be the focus of our presentation today. There are other countries and regions that are thinking about similar supply chain due diligence obligations. I think the most important one on this slide is the UK Forest Risk Commodity Scheme, where it's actually currently not yet in force in the same way as the EUDR, because secondary legislation needs to be operationalized. And then the final bullet, I don't think we need to dwell very long on that because it is very clear, I think, to everybody that the Trump administration will probably not go ahead with continuing the US proposed Forest Act of 2023. Now, maybe on that note, we can go to the next slide and hand over to Jochem.
Thank you, Gauthier. So what is the EU Deforestation Regulation about? The EUDR lays down rules regarding essentially the sale in the EU and the export from the EU of commodities and products that are the most relevant in terms of driving global deforestation and forest degradation. And these commodities and products are listed in an annex to the regulations, in Annex 1. And the commodities are listed on this slide. We're talking cattle, cacao, coffee, oil palm, rubber, soya, and wood. And then also products that have been fed with or have been made using these commodities. So examples of such products include meat of cattle, chocolate, coffee, palm oil, rubber products such as tires, but also rubber parts used in all sorts of other products. And then there's also wood products like furniture. A long list of commodities and products included in Annex 1 and classified by their EU's combined nomenclature for custom purposes, so your trade departments will be familiar with that. The cornerstone of the EUDR, and that's at the bottom side of this slide, is a prohibition. This prohibition applies from the date of application of the regulation in respect of products produced from the date of entry into force of that regulation. And practically, that means that the prohibition will apply from 30 December next or 2025. Gauthier is going to talk about that in a minute, to products that have been produced from the 29th of June 2023 onwards, with a specific, slightly broader regime applying to timber products that I'm not going to discuss right now. So the prohibition actually entails that commodities and products in scope shall not be placed or made available on the EU market or be exported from the EU market unless they are deforestation free, have been produced in accordance with the relevant legislation of the country of production, and are covered by a due diligence statement. So in essence, what that means is that companies must be able to demonstrate by means of such statements that products have been produced deforestation free and legally before supplying them in the EU or exporting them from the EU. Now, let's take a closer look at this prohibition. We already know what commodities and products are covered. Look to Annex 1 of the regulation, but to properly understand this prohibition, we will need to zoom in onto various legal terms that are being used in the prohibition that is being cited here on the slide. First of all, placing and making available on the market. These are concepts that are widely used in EU product stewardship laws, and placing on the market is essentially the first supply of a product on the EU market. And making available is essentially any subsequent supply. And the reason that the EUDR uses both is to assign responsibilities, and Gauthier will discuss that shortly, but in essence, the one putting the product on the EU market first bears the most responsibility and more than subsequent suppliers. Now, under this prohibition, commodities and products in scope cannot be supplied in the EU or exported from the EU unless they meet 3 criterions. And I'd like to briefly run through each of them. The first one is that commodities and products must be deforestation free. And deforestation free means in essence that the commodities and products do not come from land that has been deforested. So not from land that was a forest first and was then turned into agricultural use. And for wood and wood product, there's an additional requirement. It also means that the wood does not come from land where natural forests were turned into plantation forests or other wooded land. It's important to realize, with respect to this first criterion, that the regulation uses a cutoff date. The cutoff date is not mentioned in the prohibition, so you can't see it on the slide here, but it's used in the legal definition of what deforestation free means. And that cutoff date is December 31st, 2020. So deforestation or forest degradation may not have occurred after December 31st, 2020. And that cutoff date corresponds to essentially existing international commitments, such as the UN Sustainable Development Goals, and also with earlier announcements by the EU Commissions. Now, in addition to the commodities and products being deforestation free, and we're moving now to the second criterion, commodities and products must have been produced in accordance with the relevant legislation of the country of production. And that's often referred to as the legal production requirement. And the legal production requirement mandates that, in addition to being deforestation free, commodities and products must have been grown, harvested, and obtained in accordance with the relevant legislation of the country of production. And again, relevant legislation of the country of production is a defined term, and only if you read that definition, that legal definition, you will see the breadth of this criterion. Through this definition, the legal production requirement goes way beyond topics related to deforestation or forest degradation, and it captures laws applicable in the country of production concerning land use rights, environmental protection, yes, also forest-related rules, but including also third parties' rights, labor rights, human rights, rights of indigenous people, tax, anti-corruption, trade, customs. So the legal production requirements contains or covers, I should say, a broad suite of laws. and parties that wish to supply commodities and products in the EU or export them from the EU must be able to demonstrate compliance with these. Now there's the third criterion that comes in here. The EUDR requires companies to conduct due diligence to ensure that commodities and products comply. As from the date of application of the EUDR, a company supplying in-scope commodities or products on the EU market or export them from will need to first create and upload a due diligence statement through a dedicated information system that has been established and is operational by now, by the way, by the EU Commission. And by issuing such statement, companies essentially assume responsibility for compliance with the regulation. I will talk about that due diligence process later, but Gauthier, over to you, and please take us through the concepts of operators and traders and to whom the EUDR applies. You're on mute, Gauthier.
This is a bit of a cheeky slide, I'm sorry. But it's an immensely simplified example of a decision tree for a supply chain, of which you have made many for our clients, because there are a number of variations, and Jochen already touched upon the fact that you have these concepts placing on the market, making available on the market. They are reasonably well-known concepts in EU law, but here in the EUDR, there's a few tweaks and switches in that definition that make it a bit more complex. Now, Jochen explained the concept of relevant product and relevant commodity. Now, the EUDR channels obligation to operators when relevant products are intended to be or are placed on the market or exported. And there's also obligations on traders that only come into play when relevant commodities or relevant products are intended to be or are made available on the market. And depending on the place in the supply chain, the obligations will also be different whether you're looking at an SME or a non-SME operator or trader. Now, taking a step back, as Jochen explained, what is an operator? It's any natural or legal person who in the course of a commercial activity places relevant products on the market or exports them. And a trader is any person in the supply chain other than the operator who in the course of a commercial activity makes relevant products available on the market. Just try to unpack those definitions then. What is placing on the market? It's a relevant product or commodity for the first time made available on the EU market. Now that actually happens when an operator makes that relevant product available on the union market for distribution, consumption, or use, first time in the course of a commercial activity. Important, and that is maybe different from what you may have seen in other EU type product regulations. The placing on the market refers to each individual relevant commodity or product, not a type of product, irrespective of whether it was manufactured as an individual unit or of a number of series. And what is then making available on the market? It's actually the concept which you need to understand placing on the market. Well, a relevant product is actually supplied when it's already physically in the EU, it has been harvested or produced in the EU or imported into the EU and has been released for this free circulation of customs. That is where the making available and the concept of trader comes in. When a trader supplies a relevant product on the union market for, again, distribution, consumption, or use in the course of a commercial activity, and does so for distribution to commercial or non-commercial consumers. So whether it's for free or free of charge, or whether you have a sample, it's caught by the definition of making available. For the purpose of processing or for use in its own business, then it will still be making available. And so importantly, there's no obligations on non-commercial consumers. So private use and consumption are outside the scope of the EUDR, but you always hinge on this concept of trader, operator, making available, placing on the market. Allow me a few examples, and the Commission has issued recent guidance in which a number of these examples have been shown, and they may help understand the complexity, because here that example we give, it's as if you always come at one individual place, but it's not true, because you're going to have multiple obligations for same or similar or added on products. If you take a manufacturer, he imports into the EU or they import into the EU, then you will have an operator. That operator will have to exercise due diligence. If you, for instance, take palm oil, that means there will be a DDS, a due diligence statement on the palm oil. There will be a reference number in the customs declaration, and that will be the start of the process. But if that same manufacturer that has imported from a third country this palm oil uses the palm oil to produce, say for instance, industrial fatty alcohols, and sells it on to another manufacturer, actually this initial manufacturer is actually again an operator when placing the industrial fatty alcohols on the market, and actually will need to make sure there's a separate diligence statement on the fatty alcohols before placing on the market. And then you may have the receiving party that is a trader. Another example, just to show the complexity and the way all these layers add up. If you have a wholesaler who imports cocoa from a third country, so a non-EU country, sells it on to an EU-based retailer, and just assume the retailer is not an SME. If that retailer then adds additional cocoa powder from a third country, again, non-EU producer, mixes it with the cocoa powder that was purchased from the wholesaler that I mentioned in the first place, who do you have in that supply chain? Who's your operator and trader? Well, the first wholesaler is an operator importing into the EU. The cocoa powder that has been bought from a wholesaler by the retailer, well, there the retailer is acting as a trader because the cocoa powder has already been placed on the union market. If we assume that it's a non-SME trader, then actually the retailer may rely on, may rely on the due diligence statement by the initial operator when that retailer further places on the market the new product. But the retailer is actually also an operator for the initial cocoa powder that has imported directly into the EU. And so that gives you the idea that you don't have single hats so always in the EUDR. And you better not get it wrong, to be very honest, because the fines can be quite hefty. So the regulation says the fines must be proportionate to the environmental damage and the value of the relevant commodity and the relevant products. But the maximum amount of a violation fine shall be at least 4% of the operator or trader's total annual wide turnover in the financial year preceding the fining decision. And actually the fine can exceed the potential economic benefit gain. So that's a very important sanction. There's a number of other sanctions, which are again, pretty standard, I would say, in EU product regulation and beyond. It could be confiscation of products or revenues, temporary exclusion for a period up to 12 months from public procurement processes, access to public funding. There could be temporary prohibition from placing on the market or making available on the market or even exporting certain commodities or products if there's a serious infringement or if there's repeat infringements. And finally, there is a naming and shaming mechanism as member states will have to notify to the Commission any final judgment, so that requires a court judgment, any final judgment against legal persons for infringements of this regulation and the penalties imposed on them. And so despite the number of roles people may have, it's very important to understand what they are because the sanctions can be really quite important. Jochem, maybe over to you for the content of the due diligence requirements.
Yeah. So the EUDR requires that commodities and products are deforestation free and have been produced in accordance with the relevant legislation of the country of production. But you will recall that there is a third criterion before such products are allowed to be supplied on or exported from the EU market. They must also be covered by a due diligence statement, like Goche already mentioned. Now, as a starting point, more holistically, I think it's important to realize the amount and type of data that will be required to ensure compliance. So companies need to know what factually happened on the land where the relevant commodities were produced from the 31st of December 2020 onwards. And they'll also need to understand the relevant laws, this broad suite of laws in place in the producing countries. And while various tools are by now available for gathering such information, the EUDR requirements, in my view, imply that, and that's what we're seeing with clients, that EU companies will increasingly require their non-EU suppliers to provide necessary information to make sure they're able to comply with their due diligence obligations. So, due diligence. The EUDR sets out how the due diligence process leading up the DD statement should be conducted and what such statement must entail. And due diligence under the EUDR involves 3 steps. They're listed here. The first step is the collection of information. And the information could include the commodity or the product intended to be placed on the EU market or exported, respective quantity, the supplier, country of production, and evidence of legal harvest, obviously. But the key requirement in this step is to obtain the geographic coordinates of the plot of land where the relevant commodity was produced. And all such information will eventually, as a part of the due diligence statement, have to be submitted through the Deforestation Due Diligence Registry from the EU Commission. In step 2, companies will need to carry out a risk assessment on the basis of primarily the information they gathered in the first step, and the EUDR provides criteria to consider in that respect, such as the assignment of risk to the relevant country of production, the presence of indigenous people, the source and reliability of the information obtained. So that step is all about weighing the information you've been able to retrieve. And then in step 3, that the EUDR refers to as risk mitigation, that entails adopting risk mitigation procedures and measures in respect of those products that were established to be products where there is more than no risk or a negligible risk. And a negligible risk is, again, a defined term, meaning a risk level where commodities or products show no cause for concern as being not compliant. So only if there's no risk or no concern in that respect, EUDR calls for risk mitigation measures. Commodities and products sourced from countries classified by the EU Commission, that's an exercise the EU Commission is doing, as low-risk countries are subject to simplified due diligence that can in principle be limited to the first step, which is the information collecting. It's important to realize that the regulation does not provide for a predetermined approach. So there's no prescribed list of questions to ask to your supplier to base your due diligence on. And there are certification schemes, and they can be used by supply chain members to help their risk assessment to the extent such scheme covers the information you need to retrieve. But companies will still be required to exercise due diligence themselves, and they will remain individually responsible for any breaches. Now, please move to the next slide. Based on the due diligence conducted, a due diligence statement is drawn up, and due diligence statements are created and posted through the EU Commission's Deforestation Due Diligence Registry, and then they are assigned a reference number. Statements will be accessible to authorities, traders, and to a more limited extent also to the general public. And companies who place relevant products on the market also have an obligation to communicate the reference number they get from the system in respect of their due diligence statement down the supply chain, together with all information necessary to demonstrate that due diligence was performed and that it was established that no more than a negligible risk was identified. So here are a couple of screenshots taken from that system showing you how geographic data is being used to pinpoint your products to certain areas in the system, and all the detailed information that we discussed earlier on that needs to be provided in respect of products. Few brief final comments. A statement can cover multiple physical batches of shipments of the same product. There are, however, legal requirements and practical considerations here to take into account, and the EU Commission has issued some guidance in this respect, and I wanted to highlight 3 of those comments that are being made by the Commission here. First is the quantity of the relevant products must be covered by the due diligence statement, and that statement must be submitted prior to any batches or shipments of products are being placed on the EU market or exported from the market, that is. And it means that once the quantity of products covered by a due diligence statement has been fully placed on the market or exported, you will need to file a new statement for additional quantities. Second consideration here, under the regulation, companies must review their due diligence system once a year, and therefore, according to the Commission, a due diligence statement should not cover shipments or batches over a period longer than a year from the time of submission of the statement, because that wouldn't allow you to take in consideration the outcome of your review. In fact, the Commission says a longer time period could also lead to difficulties in demonstrating the correspondence between declared products on the one hand and the products actually intended to be placed on the EU market or exported. Now, thirdly and finally, with a due diligence statement, one confirms that due diligence was carried out for all relevant products, and therefore, in principle, a due diligence statement should cover commodities only that have already been produced, so grown or harvested. That's it about the due diligence. Back to you, Gauthier, on some of the other topics we wanted to raise with the audience today.
Okay. So please bear with us. There's always more law, but we'll stop definitely after this part. So the word challenge is in italics, so whether it's a challenge for you or a general challenge, let's see that. But I'll be reasonably quickly about a number of the issues that we still think they are important to be aware of. And the one is, I know zero sum sounds a bit harsh, but the kind of question zero sum contractual approaches that disadvantage smaller producers and suppliers. It's a question of fairness, but it's also a question of what is the genuine intention and purpose of the eudr and the regulation. Because you can have an individual company with a strong position in the market could actually impose codes of conduct, could impose audit requests or requirements, could impose contractual terms. But when you deal with a lot of small individual smallholders or producers, or you deal, for instance, with standard contract, like for instance, we've seen in the rubber industry, you have International Rubber Association standard contractual terms. It's not as easy to actually try, on the one hand, insert into those contracts specific EUDR requirements. It's also not easy to make sure you can allocate between the different parties, whether it's the producers, the smaller producers, or the bigger importers, those contractual obligations. The second thing, and it's a bit ironic because in the beginning I already mentioned what is the purpose, what is the intention, this whole Brussels effect idea, the Brussels effect being the EU very much wants to hold EU companies accountable and make sure that they take into account in their entire supply chain what they do in also non-EU countries. And so this whole idea of accountability for your whole value chain and supply chain could actually also have an adverse effect, because one of the things that we see and clients have been contacting us to understand how this works to their benefit or to their disadvantage is that you see segmentation of exports tailored to different consumer requirements or tailored to different markets where non-compliant producers end up serving markets with less stringent laws, which actually then negates the whole idea of having EUDR as a purpose. The third element, and that's also a bit linked to the first element, is allocating responsibility in complex trade flows and intra-group arrangements, because it's all great to have a code of conduct and impose on your suppliers that they need to comply with it. But the allocating process is very complex, and it can be very complex because it depends on ownership of certain goods. It depends on what position you have in the supply chain. It depends on what position you have, depending on whether or not you're an original operator or downstream operator. But that creates a lot of questions on how to deal with it. Again, take into account the pretty serious consequences non-compliance may have. Jochem already touched upon the issue of third-party verified certification schemes. Yes, they can be relied on, but there's always a bit of, I think the EU reflexes, if it's not in a law, it's not really valid. So voluntary schemes, I would not say are frowned upon, but you may see that in the Commission guidance, there's a lot of questions on how the standards are set for those verification schemes, what the implementation are. So are they being audited? How are they complied? How do they ensure compliance? And their governance structure. So that is something which needs to be taken into account also. If one would want to rely on these certification schemes, they all will need to be audited and be in line with what the Commission has in mind. There is ambiguity, and I don't want to dwell too much on that because that's too much lawyer talk, but a lot of the definitions are really unclear. Some of the central definitions, I mean, the definition of forest, the definition of agricultural use, the exceptions to a definition of agricultural use, so which uses are allowed in order to be outside the scope of deforestation. There's a lot of discussion about what they are, and so that is very important to understand. And finally, one thing that is missing in this regulation, which actually, and ecoDa has also invested a lot in bringing to your attention the CS3D, so the Corporate Sustainability Due Diligence Directive, where you have a whole set of a very detailed, for a directive in any case, a very detailed approach toward SMEs, with specific requirements for bigger companies to help SMEs, to provide support, to have fair, reasonable, non-discriminatory type of clauses in the contract. And that's something which is lacking in the EUDR. Again, if you look at it from a wider EU angle, that's a bit weird because specifically in this area, there are a lot of small individual SMEs or even smaller micro companies that are involved in the global trade. And maybe one last word at the last slide for the recent developments. Most of you know and have seen press articles that there is this big question: will the implementation deadline, or maybe not the implementation deadline, but will the kicking into force of the EUDR now be extended to December 30, 2025 for the large companies, June 30, 2026 for smaller companies? Now that is currently still open. And just in 2 words, the Commission came with that proposal to come with a 12-month extension, so December 30, 2025. When that came to the Parliament, because the Commission can only initiate a process and then it needs to go to the co-legislators, Parliament and Council, the Parliament came with a large number of amendments. And actually, one of those amendments, the most discussed about, is that no risk category. Because as Joachim explained, depending on the risk categorization that the Commission will need to apply, the scope and extent of the due diligence will be different. The Parliament came with a no risk category, which would almost, and I say almost because the texts are not very clear, but almost reduce your obligations to almost nothing. But in order to be a no risk country or region, the 3 criteria would be that the forest area development has remained stable or increased since 1990 or compared to 1990. The Paris Agreement and, here we go, international convention on human rights and on preventing deforestation have been signed by those countries or parts thereof, and regulations on preventing deforestation, forest conservation at national level are strictly implemented and enforced in full transparency and monitored. Then I'll stop talking because about almost every word in that suggestion, there is discussion, there's unclarity, and none of those terms are existing currently in the present EUDR, so that means that if this would want to be, or if the Parliament really wants this to happen and wants to get the Council on board, there's a need for a lot of additional definitions and explanation. And so what is about to happen now, December 31 is the cutoff date. So before December 30, there needs to be an extension. It's, for me, at this stage, unclear what will happen. The Commission could withdraw its proposal and then everything applies as of December 30, 2024, which would be a very unpleasant thing to do. But there is also a possibility that Parliament and Council indeed find again each other and that the Commission does not block or wants to withdraw its proposal. But that would actually mean that the last plenary sessions, which are scheduled for December 16 to 19, will need to have this proposal again discussed and tabled and published before December 30. Otherwise, do you have this unclear and not entirely settled text which will apply? So with that, I would suggest that Joachim, I stop talking. If you have questions, please do so via the Q&A. And Michaela, you've been very patient, so I'm very happy I can finally pass on to you.
Thank you so much, Gotti and Joachim. And I believe we will have my presentation also up on the slide. Thank you so much, Beatrice and Maija. And this serves as a reminder, as Gotti was just saying, that we have planned a time schedule to be able to take in questions at the end of this session. And I see we have one already in the Q&A section. So please do post any questions you may have, and we will revert to those. We can go to the next slide. As I was saying in the beginning, I come from a company in Finland, which is active in we're active in the forestry industry. We are one of the largest private forest owners in the world, and a leading provider of renewable products in packaging, biomaterials, and wooden construction, which are the foundations, sort of founding pillars of our business. We can go directly to the next slide to show a bit what we are doing. Hence, basically all we do is producing products that are made out of wood, so out of forest products. So this already shows that, of course, for us, the EUDR legislation is, I mean, a key block and key element in our activity. And of course, as a company, we very much support this regulation and find it very important and sort of endorse it fully. And for us, of course, it's at the very key of all of our activities to be able to ensure a sustainable supply chain in regards to forestry industry, and also to ensure the protection of both forests and biodiversity, which we are as a company also working very actively on. And what we are doing, we are using wood products, and we have then, as I said, three pillars for our business. We are producing renewable packaging used in different segments of the industry. We are producing material for sustainable building solutions, so building blocks. And we also are producing certain biomaterials innovation, which may be different type of products derived from pulp. So that is the part of the wooden material you get when you use forest products. And we sort of our whole aim is to be able to substitute fossil-based materials and be able to work in a very enhance a very circular business model. Let's go to the next slide. This has already been presented by Gauthier and Jochem, so I won't go into this in detail, but we have already discussed the basis of what are the requirements that the EUDR sets for the wooden raw material. And as we were stating, this concerns also much more than the wood, but for my company, it relates to the wood, so I talk here most about the wood. But this also, of course, the process applies to then all other businesses using other materials, such as the ones that were mentioned in the beginning of the presentation. But it's a requirement to ensure that all the material we use is free of deforestation and forest degradation. And we already went through a bit what that means. Ensure the legality, which is as also was mentioned, a more large scope than only ensuring the deforestation. It's ensuring labor and human rights, indigenous people's rights, land use right, environmental protection, also topics such as tax, anti-corruption, trade and customs regulation compliance. And then the due diligence statement that you need to produce, we talked about. So let's go to this next slide. For our business, this is, I would say, a bit, in a way, I think a bit easier than for many others, in the sense that we have already since 10 or 10 plus or even 30 years actually worked in an environment where we are actually using certification models. And we discussed that it's a bit unclear now how these can be relied upon according to the EU regulation. But sort of what we have been doing already since decades is to have certified products, and we have had already a sort of a tracking system. We have had an audit system, and we are auditing basically the origin of all the wood that we are using, both the certified and the non sort of what we call the controlled wood. And a very large amount of our wood is then certified according to the PFC or FCA certification systems. And we have already also since a long time reported the use of our wood according to another regulation, which is the EU timber regulation, which will then be sort of replaced by this EUDR. And that has been in effect since 2010. So we are basically having a foundation to build on very strongly in this work. And why I'm saying this is, of course, to show that this is something that has been implemented since a long time, and obviously now constructing this also for other businesses, which are very, very good thing to copy, but of course demands a lot of work and has been something that has been developed since a long time. And also, let's say, the reporting of this and the communication externally of this, which we're doing yearly in our reports. Let's go to the next slide. So what then based on this history and what we have done previously, what has now the EUDR meant for our company? We have obviously worked on this already since 4 years since this has been in preparation, and worked on the different elements of implementing this in a business scenario. There are 4 types of key actions that we have identified. First, we have, of course, had a very extensive work to review and update all of our policies with regards to the wood sources, wood use, and reporting requirements. We have a wood and fiber sourcing policy and land management policy and an environmental guideline. They're actually found on our website, also publicly available if someone is interested. Also, update of the description of our due diligence systems to correspond to the requirements of the EUDR, and then also preparing for the public reporting on this as of the years to come. There's also been an extensive work on internal awareness and capacity building sort of inside our company. We are a large company, global company, so there are a lot of different teams and business divisions and so forth, and the type of actions involved. Then we have done a risk assessment, ensure that we have sort of developed our supplier risk assessment framework also to validate all of our suppliers based on the requirements of the EUDR regulation. Assessed sort of the possibilities to conduct risk mitigation actions, and then reviewed all of our internal processes. Then the third pillar here is probably I believe, the biggest work element for all the companies in scope of this regulation. It is the IT landscape, because as Gautier and Jochem here was explaining, the requirement is to trace the material all the way to the origins, to be able to put this information into the EU IT sort of systems and common sort of common reporting frames, and then input all the data. So that, of course, it requires all the companies to build a full traceability in all of their customer IT systems, ERP systems, invoicing systems, and so forth. So you have these sort of work together with the regulation, and that is and sort of ensure that the automatic data transfer work, that they work fast enough to be able to function in practice, to be able to rely on the information you get, to be able to place the product you have further to your own customers, and have the whole chain working. So this is something that is at the core sort of the implementation. Then obviously the fourth pillar is engaging with all of our customers or suppliers. We have since many years engaged in discussions and held trainings and so forth, agreed on how the implementation will be done. And obviously also big work on what also Gautier and Jochem mentioned, the updating of the contracts, both sort of on the supplier side and on the customer side, and sort of trying to have these all requirements aligned, which obviously is a very huge work. If we then go to the next slide. This is a very busy slide now, and I won't sort of go very much into detail but I wanted to sort of include this in the presentation to show a bit how this might work, because this is, of course, especially when you talk about the legal side, you might think about how does companies do this, right? To do sort of the supplier versus the customer side and so forth, and what sort of our procedure now for ensuring that we do get all the information. Then we need to require, of course, that all of our suppliers have a due diligence system in place, which is in compliance with the regulation. And we also need to require that everyone then enters this due diligence statement into the EU information systems prior to providing us any goods. And that all the criteria are met sort of with a lot of details, sort of the ID and verification numbers and geolocation data and so forth. And then we either get this information from our suppliers, or then if we have very small suppliers, we may agree that we sort of do this basically work on behalf of them. And then that is something we can do, especially in the markets where we are already, like in the Nordic markets, where we are operating sort of on the sites together. Even if we might purchase wood from a smaller supplier, then we are sort of co-working with the harvesting process and so forth. So we are able to access the data and sort of do this. So I think for us, this is actually on the supply side a bit, if one can say so. I mean, this is a huge exercise, but a bit easier than I think for many other businesses actually, who are further up in the value chain in a way, because then you need to ensure sort of how much of the information you need to retrieve to fulfill your obligations according to the regulation. And then one made note that there are certain differences with regards to whether you are an SME or a larger operator, but as also Gautier and Jochen stated, it might not be entirely clear sort of how this is to be interpreted. But if we go to the next slide, which is my last, and then potentially raising some of the what could say concerns or the issues that one may raise with regards to the implementation of this. And I already noted the first bullet point here is sort of the IT work, and for us, this is, as already said, this is very in the core of our operations and something we have largely done already before. So we have a lot of traceability systems in place, but obviously this now will be extended to a lot of additional actors in the markets, and will require the same level of implementation. And then sort of potentially the legal, the most difficult potential interpretation we have identified in a legal way is to identify what is the sufficient due diligence, and throughout the chain, sort of what kind of information can sort of our customers trust, and what do everyone sort of collect along the chain, sort of how many times is this work performed along the chain, or how much do the different actors along the supply chain are able to trust the work that the other ones have done. And this is something that is, I believe, very much still sort of pending the market practice to be established in different types of industries. And then there is a quite different level of preparedness still in the EU. So different member states are at different stage, and of course as a global company and a company working throughout the EU and in most of the states, we of course need to follow also the national implementations and national preparedness in all of the states, which then of course one can see that it's a quite huge work. And then it has already been raised that sort of now we have received certain guidelines and FAQs to support the implementations, and then the EU information system has been put in place. But there are a lot of issues with these, of course, still. So we find that this delay of 1 year, we sort of fully endorse the regulation, and we are prepared for its entry into force already on 1st of January. But we also see it very well justified to have the extension of 1 year to sort of get the full scope of this, because I believe that on the market in general, there is still a lot of unclarities and things to set in place. And likely then this extra year would be well justified to get all the last questions then clarified. But this was sort of in short on a very large topic, the main issues that I felt were worth to raise from my industry, and I guess the main message is that again that we are in the core of this, and then we have done a lot of work on this, and this is sort of in the very essence of what we do. But of course, this is an example of what you need to then implement in all basically sectors concerned about this, which might not have had such a deep focus on this type of work earlier. So from my side, thank you. And then I will give over. I don't know if you, Gautier or Jochen, have any comments on this. We have, I see, still one question have come up. So let's see if we get any additional. But perhaps any comments from you on this.
If I may, thank you very much, Michaela. I think I do really understand the need for an extension, because I think while we all may agree with the purpose and the intent of the regulation, I think the lack of preparedness by local authorities and maybe also the guidances, do you find a way to weigh on that discussion? Because it goes every way, I think, in the Parliament, the Council. Do you find that there is sufficient or enough people listening to, for instance, Stora and your business? Because the no risk area, is that something that you would support, or is that something that just popped up in a political debate?
Well, I would still need to sort of evaluate our, support and our stand there. But I do think, we have a very good sort of from our side, we have a very good discussion and sort of cooperation with the regulators and the sort of, in the sense that we have worked so much on this, so we have been quite into the details for a long time, so we feel that what we do is we will continue to collaborate with all the relevant stakeholders here to ensure just that this is well implemented.
There's one question, and so the question I was raised is whether it's currently an intent, or now or in the future, to expand the scope of relevant products, for instance, to include cereals and grains. I don't know if anyone wants to answer specifically, or because we haven't allocated the question, but I think if there's one answer to that, so there is a review clause in the regulation itself. One element of that review clause actually quotes that the Commission by June 30, 2025, but very unclear whether it will stick to that deadline, make a plan and think about, for instance, maize as a new potential commodity that will be part of the EUDR. So there's no specific mention of cereals or grains, but maize is specifically mentioned. And the other thing which is important to understand is that there's a general review clause every 5 years. So by 2028, the Commission is to come with a report on the application. And that may shift, obviously, depending on the deadline in which the regulation effectively will kick in. But there's a general review clause that in 5 years, the Commission may come up with reviews, including new commodities, new products, etc. So that's maybe on the legal side. I think maybe if I can channel it to you, Michaela, is a question on the track of, how do you keep track of the cost of compliance?
Yes, thank you. That would be more directed towards me. And I believe in companies in general, when you face this type of new regulation, like the EUDR or might be as we touched upon, the CS3D coming up, you usually make an estimate of sort of cost for implementation it's kind of a project. When you start a project like this in the company, when you scope the sources resources needed, but potentially the cost, especially for the IT system side, and you strive to scope the FTE cost that is involved. So that is, I believe, something that all companies would try to do. Now, do you achieve full sort of scope of it, especially in costs of FTE work scope? I think that might be a bit difficult, because to exactly calculate how much time has been put in of all different. So not on a detailed level, but as on a higher level, yes, I think it's prudent to do so. More for internal use.
Okay. I'll let you take a breath. because I
Then
think
probably,
another question for
Gauthier,
you.
one comment to add there. I think actually the task of ensuring compliance will be burdensome and costly, but then, as you explained also earlier on in the webinar, the cost of non-compliance may actually outweigh this, and I think that's an important consideration to take into account.
Absolutely. Thanks, Jochen. Michaela, I think there's another question that probably is more intended to you. So the question about digitalizing. Don't try English words I can't pronounce. Well, how you have digitalized the whole process. Do you do it internally, or do you use existing software? Have you something that developed? I think that's a question that comes from the audience.
At least from our side, it has been a lot the question of working with our existing IT systems and integrating this into this, because this needs to be integrated into the sort of core, ERP, customer, IT, invoicing systems, etc. So it, and then you might have different levels in different companies of how much you need to update the existing IT system. So more of that scope. But I mean, it's a very good question, and I mean, considering now how fast this area has moved in the last year, right? Since sort of this has taken a leap through during the implementation. I'm talking about the digitalization during the time of implementation of this regulation. So I believe, I mean, this will be a very critical question in the future, and how much you can add from the digitalization onto this, so that you can use easier systems, and perhaps in I mean, smaller companies, you could use it from the start, more sort of taking a new system to handle this. But I think in bigger companies with very different type of systems, it might be difficult to buy an off-shelf product, but you have to work with the ones you have.
Okay. Can I ask you one more question, Michaela? Because we talk about the uncertainty, lack of, well, maybe not lack of guidance, but lack of certain criteria set for benchmarking countries, unclarity about a deadline. What would be your, and you guys started really far into preparedness, but what would be your tip to those companies which are still like struggling today? What would be your first thing that they would need, that you would advise them first to tackle in order to be ready?
It would be, you need to somehow scope the due diligence process internally, and you need to scope your supplier sort of base and your customer base, sort of to which extent you are concerned by this. And then you need to scope the IT systems, and it all of these elements, and it's quite tedious, so you don't get kind of away with that. There is not really a simple answer to this, but probably, I mean, if you are a smaller player, also to really, I mean, find an advisor that is really well into the area and able to help out with interpretation, because it's also so detailed that you are unlikely to have resources to dig into every detail and so forth. So
I think there's one more question for you. Sorry, Michaela. On the governance, or to what extent that how your governance would be involved, and is there a testing involved, your internal controls? I'm not sure whether that's something you can speak to.
Yes, and to which extent governance is involved, if I understand the question correctly, I mean, I think sort of setting out the internal governance, how this is governed, and for instance, we have, as I said, we have global business, we have different business divisions with very different types of products. I think setting out the governance for how we work with this is a key element, and then how we sort of align on group level, and how we report, and what kind of criteria, how we interpret the different criteria, and then I think that if I understood the question correctly, that is key. And I also see that it's absolutely key to have sufficient internal controls to control all of these processes, because now when they are running, then you need to implement that side. So I also see it as a key element.
And I think we're at the end of our webinar. I think, Michaela, you probably should start like a workshop, because there's a lot of people still wanting to hear from you, I think, with all your experience. But thank you. I would actually like to take the opportunity. Well, thank you very much for Jochen and Michaela. Thank you very much to the audience for having assisted us in these times of, I wouldn't call them uncertainty, that's so dark and gloom, but we still don't really know what's going to happen over the next couple of weeks with the EUDR. But it remains a very fascinating project, and probably a lot of thinking and a lot of preparing that is still to be done. So I think on that note, I would thank you very much, everyone who joined, and hope to see you at another ecoDa webinar in this year. Maybe not, but maybe next year. Thanks a lot.
Thank you very much.
Thank you.